Good morning or good afternoon, everybody. This is Alessandro Sciamarelli, Director of Economic and Market Analysis at Eurofer, the European Steel Association. Today, I'm going to present the major findings, the latest evidence on the European steel industry and steel markets, based on our latest quarterly economic report, which you can find available on our website. The latest data which we will present are up to Q2 2021. And as we always do, we will get started with a quick overview of the macroeconomic picture with the latest GDP forecast, the latest quarterly GDP developments. In a nutshell, in 2020, the EU has experienced its worst economic recession ever, with a GDP drop of -6%. And in Q2 2021, the latest quarterly figures signal an exceptional year-on-year growth due to the comparison with the very, very low GDP figures recorded 1 year earlier. But however, it's worth reminding that the European economy, after the outbreak of a pandemic in Q2 2020, which was the most important reason for the exceptional recession, has experienced a very positive economic momentum, which has most probably culminated in Q2 2021. But then, since then, the economic outlook has changed very rapidly, and the economic landscape has been increasingly affected by a lot of issues, particularly skyrocketing energy prices, global supply chain disruptions, and accelerating inflation. So the outlook for 2021 and particularly 2022 has been revised a bit, and the economic outlook is now much more uncertain than it used to be a few months ago. And as a result, you can see here the latest economic growth prediction for 2021 have not been revised upwards. However, the US will grow more in terms of real GDP than the EU or the euro area, 6% versus 4.7% in our latest Eurofer forecast. Then we will have the European Commission forecast very shortly. We will see, but anyway, the economic picture is becoming much more uncertain. This is also witnessed by the latest confidence indicators, which obviously very strongly rebounded after plummeting in Q2 2020, which was the outbreak of a COVID-19 pandemic. Then you can see some signs of easing in economic confidence as well as industrial confidence, started from July, August this year. And the economy is now entering a phase of uncertainty, particularly also the industry, which has driven very much the recovery after the worst moments due to the pandemic in Q2 2020. The recovery was very much industry-driven, whereas services remained very weak and then went back to positive contribution to growth. But then as I said, the outlook is becoming more uncertain. Then steel using sectors in the EU, here we see the evolution of major steel using sectors in latest quarters, with growth rates, year-on-year growth rates plummeting down to almost 50% for automotive in particular in Q2 2020 due to the pandemic. But then steel using sectors were already in a downturn before the pandemic throughout 2019. And after the trough of the cycle in Q2 2020, there has been a strong rebound in output, which has led to positive growth, all sectors in positive territory already in Q1 2021. So the rebound has been stronger than expected, particularly for automotive and domestic appliances. Construction has proven relatively more stable, as you can see here. But then, as I said, all sectors were already in a downturn before the outbreak of a pandemic. And then in Q2, we have this very, very sharp rebound with exceptional growth rates, particularly for automotive, which, however, had experienced the worst year-on-year drop in Q2 2020 due to the comparison with the very, very low Q2 2020 figures. So that's the outlook for steel using sectors, which is also confirmed by latest leading indicators for the industry. You can see on the left-hand side the evolution of orders, with the orders already in a downturn, well before the pandemic throughout 2019, reflecting deterioration in the manufacturing sector in general, and particularly trade tensions at the global level due to the fact that steel sectors, and particularly automotive, which is motor vehicles here, are very much export-oriented sectors, so are very vulnerable to fluctuations in international trade. So then we have, since Q3 2020, we have this very, very sharp rebound, leading to very, very high order levels in historical terms. But then we have seen here from July this year clearly some signs of easing, and probably a turnaround in orders, reflecting the gloomy expectations due to ongoing disruptions along the supply chain, particularly for automotive, which is being very much impacted. And then industrial production year-on-year growth rates, same pattern here, negative growth rates culminating in drops of around -30 or 40% in the EU and major industrial economies, followed by rebounds quarter-on-quarter in Q3 and Q4 2020, but then still negative growth rates year-on-year, and then back to growth in Q1 2021, and then obviously very, very sharp rebounds in Q2 2021 due to the comparison with Q2 2020 figures. We have also a very quick overview of the two most important steel using sectors. Construction, which accounts for 35% of steel consumption in the EU, appears, in our view, to be better placed than other steel using sectors in relation to the outlook for 2022. It will rebound by 6.4% in 2021 after a drop in output of roughly 5% in 2020. The sector appears to be is likely to benefit from considerable public support, particularly in relation to civil engineering and via the Next Generation EU package, and also in relation to the residential sector, thanks to many housing supporting schemes in many member states. Whereas automotive, on the contrary, which accounts for 16% of apparent consumption, is very much likely to continue to be disrupted by the supply chain issues, which are likely to continue at least until Q1 2022. The automotive sector is also being hampered on the demand side. As you can see here, the number of passenger car registrations in the EU, which has continued to drop in recent months. On the demand side, consumer demand appears to be very weak, and is likely to remain weak due to consumer uncertainty and uncertainty also in relation to implementation of electric vehicles. But the automotive sector is likely to be heavily disrupted also for the rest of 2021, and also at least in Q1 2022 by the ongoing supply chain issues, particularly a shortage of components, skyrocketing shipping costs, and very, very high energy prices, but particularly the shortage of components is very much affecting the automotive supply chain. And then to recap, finally, the steel sectors here, you see two tables which recap what is happening in output in 2020, which was the COVID-19 recession, which affected very much the actual output, and the outlook for 2021. And you see here the previous two recessions in 2019, in 2018 as well, for two steel using sectors, automotive and domestic appliances. But also here we compare what is happening in terms of real output loss in the previous big economic recession, which has hit Western economies. That was a financial crisis of 2009. So three things can be highlighted. The first point is that the COVID recession was milder in 2020 than in 2009. And steel using sectors were already in recession, as we said, in 2019 and also in 2018, particularly for automotive, which experienced a drop in output of roughly 6% in 2019. And automotive in both recessions, in 2009 and also in 2020, has been hit most severely, more severely than any other steel using sectors. Then we go quickly to the EU steel market. This is a slide which shows the long-term evolution of supply in the EU as a steel producing bloc, and so the evolution of supply. Basically, what you can see here is that we've had, obviously, in Q2 in 2020, we've had a recession in steel production, as well as we had in 2019. The recession in 2020 was minus 12%. And it is likely to be followed by a rebound, according to our latest available figures, of around 18%. But as we've seen for Studios and Centros, the recession in 2009 was much bigger. We had a drop in production by 30%. And most importantly, steel production has never recovered from the losses which were experienced in 2009. And so in historical terms, production levels remain rather low. So this is the evolution of production. And then on the demand side, we see the same pattern for apparent steel consumption. So here we present quarterly data to better show fluctuations, but the story remains more or less the same. So apparent steel consumption started falling before the pandemic in early 2019, reflecting the negative conditions of a manufacturing sector and negative trend in steel demand, and they've never recovered from the losses experienced during the recession of 2008-2009, which you can see here. We have this very strong rebound started from Q3 2020. Then demand is set to continue to grow, but we will remain, however, around rather low levels in historical terms. And here we see the evolution in quarterly terms of apparent steel consumption as well as in imports. Negative growth rates from Q1 2019 in apparent steel consumption as well as in imports, reflecting poor demand. Then we have this we have apparent consumption back to growth in Q4 2020 by 3.6%, followed by another quarter of growth in Q1 2021, and this is exceptional, very, very sharp rebound in Q2 2021, but which is also matched by an even higher increase in imports by 46%, which is almost entirely due to the comparison with Q2 2020 data. But in any way, we foresee that despite the ongoing supply chain issues, apparent consumption should continue to grow also in Q3 and Q4 2021, despite the ongoing uncertainty. And in annual terms, apparent consumption in 2020 fell by minus 10.6% after a recession of 5.2% in 2019, and it will rebound by 13% in 2021 and by 4.7%, much lower than in 2022. And last thing is the evolution of trade balance, and which shows the relative positioning of the EU in terms of trade balance versus the rest of the world. And what we can see here is that trade balance for steel products has remained negative over the last 5 years, with a most severe deficit recorded in 2018, and then deficit has been slightly narrowing, but however, the EU remains a net importer of steel products and appears very much under pressure in this respect. And then you can see as a very last slide, to recap the main challenges for 2020, for the rest of 2021 and 2022. In addition to what we said, the pandemic continues, which also casts a shadow of uncertainty on the economic recovery due to slow vaccination plans still below the implementation target. And then we have global supply chain bottlenecks and disruptions, which are continuing and are not expected to ease substantially before Q1 2022. And then inflationary concerns, which are still there. And these were at the beginning perceived as temporary, but then many even central banks and many observers have changed their mind and foresee that inflation is not going to ease substantially in the very short term. And then this may trigger some changes in monetary policy in the euro area, which is something which needs to be avoided in order to make sure that the next generation EU is doable, and also that the additional amount of public debt which has been created to finance the next generation EU is sustainable. And also import penetration remains an issue, given the increasing capacity by other steel producing regions, and given the existing trade deficit, which is which has been recorded by the EU in recent years. Thank you very much for your attention. This is all from my side. Thank you.